profits. Which comes first? The S&P 500 index rose to its highest in 4 weeks as the benchmark pushed through its average price for the past 100 days, a level it hasn't crossed in a month. Well, now, for more analysis on market themes globally, Morphic Asset Management's Chad Slater, Co-Chief Investment Officer Chad Slater, joins me live from our Sydney CBD studio. Chad, great to see you again. Now, let's talk about sort of where to now, because there have been these kind of major conniptions for the last couple of months. The volatility sort of returned and bonds kind of, yields took off. Where do you see markets heading over the next several months?
Yeah, Helen, I think I, for one, and I might speak on behalf of other market participants, feel like we're suffering a little bit from Twitter tantrum / Twitter fatigue. There's just been an topsy-turvy, up and down last couple of weeks. But as you touched on, I think what was quite interesting, it felt like last week the market wanted to go higher, and you sort of saw it with the Syrian news that markets came in and they just wanted to go up this week. And the reason being, and you touched on in your introduction, was that earnings are looking pretty good. So what you're seeing at the moment is finally, I think people are saying, you know what, I've had enough of these tweets and I want to focus on earnings. And so it does feel like markets want to keep going up from here, maybe for the next couple of weeks. But we feel at the moment some of this volatility is behind us. Touch wood.
Okay, so you think it's behind you, behind us. Do you think, therefore, that the markets, and markets do tend to do this, they ignore sort of reality for a while, so they ignore that there may be some kind of escalation in Syria, although it certainly doesn't look like that, and the United States has made very clear that they're not after regime change. Do you think markets are getting back, as you say, I guess, to business and just saying, well, let's look at the numbers?
I think so. It feels like that. Clearly, obviously, if China comes out with a huge tariff war from here, that markets are going to struggle to rally. But what we see is, we look through earnings revisions in the last couple of months. So we've had 3 months of stock markets going up and down, and the old Buffett saying, vote. In the short term, they're a weighing machine. In the long term, they're a voting machine. And what we're seeing now is, I think people are just focusing on the earnings. In the last 3 months have all been revised up. So compared to where we were 3 months ago, earnings are actually higher, yet markets are lower.
Yeah, so what does that mean, though, in terms of now we do have perhaps more information on the table about a potential tariff war, trade war, because of tariffs imposed?
Yeah, I think, well, there's another old saying that markets hate uncertainty. They can price risk. So if there's a risk that's known, it's the uncertainty. So in some respects,
the unknown. Unknowns,
yeah, the old Rumsfeld quote. It's actually one of his more insightful ones.
Yes, exactly.
Is that it's a known unknown now. Now, I know it's a bit of a weird sort of thing for your viewers to think of, but markets in the head sort of can now start assigning some probabilities and have some numbers, and can actually start baking that into their forecasts. And that's a lot easier to deal with than having no idea what anyone's going to say. So I think, yes, there are risks, but the markets are attempting to identify those risks, quantify them, and start working with them.
Yeah. Now, just let's digress to the ever popular sort of FANG stocks. I mean, are you in them, or do you just watch them? And how do you sort of look at those kinds of stocks?
Look, Helen, as you're probably aware from our many chats with myself and Jack and Jeff, we focus a lot more in Asia. Our focus tends to be India and Japan and Asia in the region. So they're not really our type of stocks. But nonetheless, given they've driven the market higher, we do keep a watching brief on what they're doing. And what was interesting was they led the market higher, and they also led the market lower. So there's another saying that you follow the leaders. So watch what the leaders are up to. And Netflix numbers were fantastic. Subscriber growth numbers came out yesterday. And what you're seeing is these stocks are leading the market back up again at the same time. So no, we're not in them, but we're very much aware. And even Amazon, some of the pressure seems to have come off and the stock is rising again. So it's when the leaders are failing is when you should worry a lot about the market.
Yeah, all right. Now, you mentioned Netflix, and I go grrr because, do they actually have any earnings?
Helen, you asked why we're perhaps not in the stocks. We like to have our stocks doing some money. Look, Netflix I think trades on a PE this year of 110 times. So look, there's a lot of growth factored into those forecasts. So they better be getting a lot of subscribers. Right. It's not us.
Yeah, okay, Chad, I just want to talk to you about, you know, the good and the bad, I guess, of Chinese GDP and that information, the data we got yesterday.
Yep. Yeah, like Chinese GDP, as we said before, we're focused on Asia, came out yesterday. Now, it was in line, but the composition was really interesting. Retail sales beat. So everyone's been on the back of China about rebalancing their economy, getting their trade surplus down. So retail sales growing is consistent with a shrinking current account surplus. So what that means is hopefully that they import more, which will be better for Trump and better for the trade war. But the other side of that was, if you look at industrial production numbers, they're a little bit on the weaker side, and fixed investment was on the weaker side. And Australia doesn't export a lot of the stuff that the US exports. Australia exports things like iron ore, and iron ore tends to go into those IP and fixed asset investments.
Yeah, that fixed asset.
So net on balance, whilst the number was in line, it was probably better for US exports than it was for Australian exports.
Yeah, all right. So how do you see it? Do you believe the figure, the GDP figure for a start?
Look, that one's been brought up many times. Look, all I'd say on that is it takes the US, which I think has a lot more practice and a lot more statisticians, the better part of 10 weeks to put their numbers together, and Chinese do it in 4 to 6. So I'll let your viewers figure out the speed at which they get theirs out. Nonetheless, they're generally in the right direction. You can cross-reference the numbers, a few other things. Yeah,
okay, we'll just move on. One final comment, Chad, on today on which market in Asia that you have liked for some time, but which one do you like at the moment?
Look, we continue to really like Japan from here.
Yeah.
Now, what's been interesting in the last couple of weeks is the Nikkei actually made its low point 3 weeks ahead of the S&P. So the S&P only bottomed 2 weeks ago.
Yep.
And we look for those sort of things as like an indicator that people are willing to step in early. So the Nikkei has been outperforming in the last couple of weeks. I know it's very short term, but it gives you an idea that things are still on track. And I mentioned earnings revisions at the very start.
Yep.
The one region with the best earnings revisions in the last 3 months has been Japan. So we continue to really like the stocks there. We don't see anything's broken. We see this as a buying opportunity.
All right, Chad Slater from Morphic Asset Management. Thanks so much for joining us.
Cheers. Thanks, Helen.
We're going to take a very short break, but coming up, admissions, revelations, scandals, CBA and AMP, their financial advice arms, again under pressure as the Royal Commission spotlights the industry giants' bad behaviour. We'll have some analysis coming up.